Welcome back and thanks for staying tuned into Chartbusters on CNBC-TV18. Now let's move on and talk about Suven Pharma. They've delivered a very strong set of numbers in Q3. Revenue growth of around 40% this time on a year-on-year basis. Margins at 38%. What is the outlook of the company going forward? What is the strategy of the company? We have Vivek Sharma, Executive Chairman of Suven Pharmaceuticals, joining in with us to talk about the growth for the company going forward. Thank you so much, Vivek, for joining in with us. And, let's start by talking about the strong growth that the company has seen. 40% growth this time, margins at around 38%. Overall, you have a target of reaching that $1 billion revenue by FY30. So this accelerated growth that we're seeing during this quarter, is that going to be continuing for the company? What is going to drive this growth going forward?
Good. Well, first of all, thanks for having me. We had a great quarter. We shared the results yesterday with all of you. Our vision is to become a $1 billion company by 2030, and we are committed to that vision. Now, CDMO and pharma is a little bit of a lumpy business, so as you know, because pharma companies, as they buy based on their demands and all that. So yes, we are committed to an accelerated growth. We have a very detailed plan to accomplish our vision of $1 billion by 2030. And we are focused on making sure that our growth drivers as a tech-driven CDMO CDMO with the focus on ADC, oligo, as well as chemistry, our API plus business, as well as our specialty chemical business continues to grow and then continues to build relationship with customers that are longer lasting and then deliver the results that we have for the $1 billion aspiration.
Right. So then the strong growth will continue is what you're highlighting, right? That we're seeing during this time is something that has to sustain for you to achieve this also.
That's exactly right. That's how we become from where we are to $1 billion company, right? So we have to continue to grow. And growth is a factor of multiple things. So we've been investing in capabilities. We have, as you know, we have added 2 tech-driven acquisitions in the last 6 months with Sapala in India, as well as with NJ Bio and ADC. And those are areas where we are looking to accelerate growth, build better relationship with customers, and then provide them more tech-driven and forward-looking services. And as you know, last year, there was about 50 or so US FDA approvals for new drugs. 2 of them were oligo drugs. There's a lot of investment happening in the antibody drug conjugate space. And we are excited with the platform that we have with the existing capabilities, as well as the New Jersey-based NJ Bio now coming in, that we can offer more global services, more end-to-end services in some of these spaces to our customers that allow us to really accomplish our $1 billion vision by 2030.
Okay, specifically on the CDMO business, this time we're seeing that 101% growth. And you've also highlighted that you're seeing increase in terms of the RFQs or inquiries, that is known in simpler terms. How much of that has actually converted to clients? And, will this strong growth in CDMO also continue? You did say the ADC side is doing well, but what is the outlook specifically in terms of growth for CDMO?
So yeah, conversion always takes time. I mean, RFP is the first step, right? So if you have RFPs, then conversion will also happen. Conversion is a factor that depends on a lot of different things. So I can tell you, I think, few things. If you look at the indicators we shared yesterday, we have 15 phase 3 projects that are going on right now. That's a very strong, healthy sign of our future commitment as to how we think that we can accomplish the targets, right? And these are products that we are working with that will start getting commercialized, at some point later this year and over the next few years, right? So that's a big projection that we have. And our goal is to build a strong pipeline of phase 2s and phase 3s while we have early stage work. So the healthier the pipeline we have of these relationships and these products, the better our future pipeline will be. So in my view, the RFPs are an early indication that you have the relationship you are building, and then you take those RFPs and convert them. And the quality of RFP means we want to get more of them, phase 2 and phase 3 get converted. With the ADC investment, what we have done is, that we are one of the very unique providers. We had 2 commercial ADCs that we were providing from our Hyderabad site. Now with the acquisition of NJ Bio, we have a front end as well as early stage capabilities. NJ Bio is one of the world's best known CDRO for ADCs. They've been awarded at the best price for the best CR for the ADCs out of New Jersey. We got about 100 plus scientists, phenomenal number of projects. And unfortunately, they did not have commercial capabilities. So they were losing some of those clients to the competition. Now with our existing capability, we can offer more end-to-end services to those. right? So we have a more end-to-end footprint as well as front-end and world-renowned scientists in ADCs.
Sure.
That gives us a lot of confidence that we can accelerate the growth. You use the word acceleration. That's what we've been talking about, and these are the drivers for us to really accelerate. Okay. Also, just FYI, we have added significant investment in commercial capabilities in the West. So, which was not a thing that we had done in the past. Today, we have 6 BDs sitting in North America. We have a BD sitting in Japan. We have hiring people in Europe that will allow us to really create that front end momentum and create the brand and connect better with customers.
Okay. What we also want to know is margins, right? Now, with all these acquisitions, how do you see your margin shaping up in the next few years? What are we watching out for there? This 38-40% range, is that something that is maintainable and sustainable?
I think our guidance has been mid-30s margin, and that we will strive to really make sure that we remain in top quartile margins in the industry. We're very proud of what we have accomplished. There's always price pressure, cost pressure, I think, from every angle, but we have to be efficient in our processes, in our resources, in the optimization of our assets to make sure that we deliver the best quartile margin to our investors.
Okay. And sir, just a last quick one. Any more acquisitions in the pipeline? You've made a lot of acquisitions in the last 4 years. Any more that we are watching out for now?
Yeah, so we are always looking. As we said, we want to be a tech-driven CDMO. And in that aspect, while we are putting some capital into the existing plants to add some more capabilities, we are always on the lookout for the right acquisition that will allow us to really accomplish our vision of $1 billion by 2030.
Okay, so, thank you so much for joining in with us on the show and giving us the outlook of the company going forward. But on that note, we're going to step into a very short break. Don't go anywhere. On the other side, we'll get you more updates.